Thank you for joining us for Part 5 in our 10-part series on the emerging market for consumer goods manufacturers. I'm Janet Dorencott with Relational Solutions, and today we'll cover the volatility that exists in emerging markets. In the past 2 years, economies in emerging market countries have shown significant weakness. Political unrest and economic difficulties are widespread and are resulting in wider fluctuations in the dollar values. All you need to do is turn on the TV to see the civil and political unrest that exists in most of these nations. On top of that, the weakened economies, even in modernized countries, have been having a significant impact on both emerging markets as well as the entire world economy. World currencies change daily. Since 2011, emerging market stocks have been significantly underperforming compared with the more traditional U.S. and European markets. In the past 3 years, the ETF that tracks the emerging markets has underperformed the S&P 500 by more than 40%. Expendable income over the past decade has been increasing, but recently that has slowed down. With less expendable income, they are less likely to buy a more expensive item, even when that item is better. Over the past few decades, emerging markets have contributed to the overall worldwide GDP. However, the recent slowdowns will have a far-reaching impact on countries throughout the world. Volatility of currency is an ongoing issue. CPG companies trying to report sales need to account for this volatility. They also need a mechanism in their data warehouse or demand signal repository to manage currency conversions. This chart from February shows market performance. Having grown fast, profits are now falling. There's been a recent underperformance in these markets, and they are seeing a weakening in demand and currency drag. Nivea skin cream maker Beiersdorf reported lower than expected quarterly results, so they determined they would plan to be a little more cautious in the next year while emerging markets are sputtering. They had previously seen growing demand and increased brand awareness in Asia, Eastern Europe, and Latin America. When Stefan Heinrich, the CEO, recently said markets are cooling down dramatically, he was referring mainly to China, Thailand, and Vietnam. Recently, global markets have been shaky, and some experts blame that on emerging markets. They had a decade of high performance, but as with anything, slowdowns inevitably happen. That said, most companies are still upbeat about the long-term prospects in emerging markets. Part 6 will discover emerging market differences. For more information, please subscribe to our YouTube channel, follow